Hello there, fellow taxpayers. Welcome to another exciting journey through the labyrinth of tax season. It's that time of year again, when the calendar reminds us of our annual financial obligations. The time when we pretend to understand the US tax code, even though it feels like deciphering an ancient language. Just kidding. It's impossible to understand without a degree in tax law, but as always, we try our best, gathering our documents and hoping for the best outcome. The IRS has graced us with a fresh batch of changes for the 2025 tax year, just to keep things interesting. Don't worry, we're here to break it down for you, making it as simple as possible. These changes will impact your tax returns filed in early 2026, so it's crucial to stay informed. These adjustments are generally smaller than in recent years, but still significant. Remember that crazy inflation we had? Well, it's cooling down, which is a relief for many. That means smaller changes to tax brackets and deductions, but every detail matters. But hey, every little bit counts, right? Saving even a small amount can make a big difference. We'll cover the key updates in this essay, ensuring you're well prepared. We'll keep it simple and use real-world examples to illustrate these changes. Because let's be honest, nobody wants to decipher tax jargon after a long day at work. So, grab your favorite beverage, settle in, and let's dive into the world of 2025 IRS tax changes together. Let's start with some good news, shall we? The standard deduction is going up for 2025. This is the amount you can deduct from your income before taxes are calculated. A higher standard deduction means you keep more of your hard-earned money, and who doesn't love that? For single filers, the standard deduction is increasing to $15,000. That's up from $14,000 in 2024. If you're married filing jointly, you'll get a deduction of $30,000. That's double the fun. And for heads of household, the deduction is $22,500. These increases may seem small, but they can make a difference in your tax bill. Every dollar counts, especially in this economy. Now let's talk about tax brackets and how they impact your overall tax liability. These are the different rates at which your income is taxed, depending on how much you earn annually. The good news is that the top tax rate remains at 37%, which is the same as last year. That's for those lucky ducks earning over $626,350 for single filers and $751,600 for joint filers. These thresholds determine who falls into the highest tax bracket. For the rest of us mere mortals, the other tax rates are 35%, 32%, 24%, 22%, 12%, and 10%. Each of these rates applies to different ranges of income. The income thresholds for each bracket have increased slightly, by about 2.8% from 2024. This adjustment helps account for inflation and changes in the cost of living. This means you might find yourself in a lower tax bracket, which is always a welcome surprise. Lower tax brackets can result in significant savings over the course of the year. It's important to note that these are just the federal income tax brackets, which apply to your federal tax return. Your state may have its own set of tax rates, which can vary widely. Always check your state's tax regulations to understand your total tax liability. Section 4, Key Credits and Deductions, Easing the Burden. Now let's move on to some other important changes. The Earned Income Tax Credit, or EITC, is a refundable tax credit for low to moderate income working individuals and families. The maximum credit for families with 3 or more qualifying children is increasing to $8,046. That's a significant boost for families struggling to make ends meet. The Alternative Minimum Tax, or AMT, is a parallel tax system that's designed to ensure that high-income taxpayers pay their fair share. The AMT exemptions and phase-out levels are also being adjusted for 2025. And finally, the personal exemption remains at $0 for 2025. This has been the case for a few years now. Section 5. Retirement and Healthcare Planning for the Future. Let's not forget about retirement and healthcare. These are crucial aspects of our future that require careful planning and consideration. The contribution limit for 401k plans is increasing for 2025. This is great news for those looking to boost their retirement savings. This means you can save even more for your golden years, ensuring a more comfortable and secure retirement. And for those of you playing catch-up, you know who you are. The catch-up contribution limit for those aged 60 and over is also increasing. This provides an excellent opportunity to make up for lost time. On the healthcare front, The maximum out-of-pocket expense amount for healthcare plans is going up to $5,700. This change is significant for budgeting your medical expenses. This is the most you'll have to pay for covered medical expenses in a year, providing a cap on your potential healthcare costs. So, there you have it. The key 2025 IRS tax changes explained in plain English, making it easier for you to understand. Remember, this is just a general overview. The specifics can vary based on individual circumstances. It's always best to consult with a qualified tax professional for personalized advice tailored to your unique situation. And always remember, paying your taxes may be inevitable, but understanding them shouldn't be a Herculean task. With the right guidance, it can be straightforward and manageable. Stay informed, plan ahead, and take control of your financial future with confidence.